Hey everybody, it's Ron from Ron's Basement. Thank you for joining me today. I've got a great update for you where we're going to dive into several factors that I think are positive for gold and silver and the associated mining shares as we go forward. So let's dive right in. First, have you noticed it's like crickets out there when you're looking for, I don't know, on Twitter, on YouTube, on the Yahoo Finance chat rooms, CEO.ca chat rooms. It's like nobody's interested in gold. I mean, nobody except me and you, and I'm glad you're here. Peter Grandich, the former, or I might even say current, Wiz of Wall Street, I think they called him. Again, Peter Grandich. He's been in and out of gold several times during his career. He's back into it right now. And he says there's a chart he has that that shows the different stages investors go through. I guess you would say psychological stages. At the top is euphoria. Things are like in a bubble. And then it goes down, 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 down. At the bottom is despondency and depression. And he says, and I agree with him, that right now we are at the despondency and depression phase. So if you're feeling crappy about this, which I think obviously everybody is because nobody's talking about it, it's like a hated sector right now, you're not alone. But that will change. That has to change. That will change. And when it does, people that are in now at this bottom phase should be handsomely rewarded. All right, number two. Just in general, the gold price. I'm going to call it Rocky Balboa. The last couple weeks, it's been this battle. Last couple months, last however long, gold keeps fighting for $1,800. And even with, these great employment numbers and the Fed, meeting, which was more hawkish than we thought, gold has been fighting like Rocky, coming back up for $1,800. And, could it drop to $1,500 in the next 2 months? Yes, no doubt. But up to now, she's been fighting within this wedge at the $1,800 level. And it's eventually going to either break much higher or much lower. A lot of people are saying, and I'm definitely rooting for it to go much higher. Number three, in January of 2016, the price of gold took off by about 30% over the next 6 months. So from January 16 through, I think it was July or something like that, gold went up by 30%. That, from a timing perspective, coincided almost exactly with the Fed raising interest rates, just like right now, okay? And again, a lot of people are pointing to this. It's not an absolute, guarantee that it's going to happen. It's not a huge sample size, but it shows that gold and silver can go up in value even when the Fed is raising rates. Now, another interesting point on that, I thought of this last night. I was laying in bed and I thought about that 2016 run, and I thought, I wonder what the NASDAQ did leading up to that. And I went back and looked, and in late 2015, when gold was kind of hitting its bottom just before it took off in 16, the NASDAQ had almost an identical 15-ish% drawdown or decrease in value, whatever you want to call it, just before the January blast off in gold. The exact same thing as now. Doesn't mean that's, who knows, maybe there's no relationship between that, but at minimum, it's an interesting coincidence. All right, number four, things are happening faster. I won't elaborate on this. I've talked about it a lot before, but these movements in the market are going to happen, in my opinion, on a much faster and faster basis because the patient is getting sicker and sicker. The patient, the U.S. economy, the U.S. financial system, however you want to say it, has been distorted and become so sick and so dependent on heavy doses of medicine, I guess you would say, that things are happening on a more quicker basis. With all this debt, with all this overhang, things are just going to happen more quickly. Kind of like a human that, you know, gets older and gets near the end of their life and they're on, let's say, life support, or a really sick person in the intensive care, and they're using all different types of treatment to try to fix the person, and the one treatment causes other problems that need to be treated, and that causes other problems, and there's heavier and heavier doses of medication given, and you know, the U.S. economy is screwed up, the debt levels are screwed up, things are so distorted, I think is the best way to say it, that changes and events, I believe, are going to be happening on a more quicker, if that's the right way to say it, basis. Number 5, Contrarian 888. Look him up on Twitter. Very sharp guy, former hedge fund manager. I started following him when we both invested in Antero Resources a couple years ago, that went on to be a stock that went up 15 times in value. He's a very, very sharp investor, and he this morning put out a kind of a string of quotes, or string of tweets, saying that he is becoming bullish on gold, or very interested in gold. And I don't want to put words into his mouth and or anything like that, but he's I believe put on a position with options on physical gold. So to me, that's a great sign. Who else? You know, Lynn Alden, a very respected person in the investment community. Gareth Soloway. There's some really legit smart people that are bullish still on gold for the rest of this year. Number 6, according to our Arcadia Economics, and he had an interview out this morning with Dave Kranzler, the short position in the physical markets has decreased significantly, and that's usually a very good sign for the price of gold and silver. All right, guys, there you have it. Just some thoughts on the gold and silver market and reasons to be optimistic. I hope you enjoyed my video, and we'll see you soon. Thanks for watching.